So in Australia, in terms of adoption, there's roughly 1 in 5 Australian adults hold crypto today, so about 20%. Like, I guess famously, crypto users have kind of been a bit anti-institution, anti-authority, because that's kind of like the core premise of crypto
Yeah.
is decentralization and whatnot. But what's really interesting is crypto users are actually more supportive of regulation than non-users are. Right now we're doing this podcast interview over the internet, right, which uses the TCP/IP protocol. I have no idea how that works. In the same way, the average mainstream user doesn't really care how blockchain works. What they want to know is how do I use it, and what benefits does it provide, and how does it reduce friction in my life? That's what they care about.
G'day guys, today we're joined by Jonathan Inglis, the CEO and founder of Protocol Theory, which is a global consumer insights and strategic research company that focuses on Web3 and digital assets. So Jonathan, welcome to the show.
Thanks for having me, guys. Looking forward to it.
Yeah, so to give a bit of an intro to the episode today, Protocol Theory and SwiftX have done a lot of work in the past, particularly around adoption rates in Australia on crypto, understanding sort of who that Aussie crypto holder is, like in terms of demographics, and what sort of the next 5 years looks like in terms of adoption, what's going to trigger that next wave of adoption. So I thought some of this research and insight is going to be really insightful for the audience to listen to today. So we're going to break down sort of a few of those insights, and then also look at a recent report that you guys did with CoinDesk. So they're a major global crypto publication. So this report focuses on the APAC region, so Australia Pacific, understanding sort of demographics and adoption there. So we're going to break that down and just pick your brain in all things sort of the crypto market. So I guess first question we ask our guests is, what was your first crypto you bought, and do you still have it today?
I feel like surely the answers to that question are fairly consistent, right? With most of your interviewees. Like most people, Bitcoin was my first crypto purchase back in 2017, 18, something like that, thereabouts. The tail end of 2017. So yeah, like most people, bought on an exchange, driven mostly by curiosity and just wanting to make a bit of speculative financial return, like most people. As I spent more time in the space, I really understood what it can do and what it's about. And so for me, it's more about sort of what Bitcoin represents, the principles of decentralization, economic sovereignty, financial inclusion, empowerment, that sort of thing. I think I did sell that initial stack over the years at some point, but I've continued to accumulate and today hold significantly more Bitcoin than I did when I was just dabbling and experimenting around in the first time. So.
Yeah, most guests we have that come on, I'd say about 80% say Bitcoin. We get the occasional Litecoin, Ethereum, XRP, but yeah, that's we haven't got any crazy ones yet, have we, Pav?
No, I don't think so. I think I was just going to say, I think we had one XRP one just recently-ish. Yeah, I think obviously the longer you've been around, the more likely it's going to be Bitcoin was probably how I see it. But you kind of nailed it, right? You usually start at Bitcoin because you sort of seek to understand what is this crypto thing all about, and then you go down somewhat of the rabbit hole, right? And you guys really, I guess, at the forefront of understanding, even in Australia and globally, what does that adoption look like? What is the rate of people sort of going down that rabbit hole? How do you feel like that community has changed when we talk about adults and adoption, be it in Australia and globally as well? What are the trends that you guys are seeing right now?
Just on the Bitcoin thing, I would love to be that interesting, interviewee that said that they aped into Dogecoin in the first instance, but I'm a bit too level-headed for that.
We're still waiting for that day to meet that.
Yeah, you might be waiting a while. I'd love to interview that person myself, I think. Look, in terms of trends, both globally, within APAC and within Australia. I guess I'll start with Australia. So in Australia, most people have probably seen or heard the stats, somewhere from some source. It's roughly, in terms of adoption, there's roughly 1 in 5 Australian adults hold crypto today, so about 20%. It does fluctuate. So we've seen it in the last 2 years or so. We've seen it as low as about 15% and as high as about 25%. But it's been pretty stable. It's been pretty stable at about 20%. And that compares, so to give you some kind of, I guess, broader context, the APAC report that we did with CoinDesk that Ted mentioned at the start of the call found that across APAC, so we did a survey of over 4,000 people in 10 markets across Asia Pacific. That included Hong Kong, China. It included obviously Australia, Singapore, South Korea, Japan, and some others. And the average level of crypto adoption across internet connected adults, so those that actually have access to the core infrastructure being the internet, was about 24% across APAC. So we're fairly, we're sort of punching above our weight in that sense. A little bit under, but there's quite a lot of variance across APAC, by the way, in terms of overall adoption rates. And so we do sit as one of the relatively higher, certainly in developed markets, one of the higher levels of adoption. And then more generally, so yeah, in Australia, fairly consistent. We haven't seen a lot of growth and a lot of like this influx of retail that we saw in 2021. We haven't really seen that since then, since the 2022 sort of crash. But there's a lot of sub trends within all of that, right? So like gender representation and participation, for example, we've definitely seen, we're moving along the adoption curve from sort of early innovators, so innovators and early adopters to the early majority and late majority. We've seen more older demographics come into the market as crypto has become increasingly legitimized with, TradFi coming in, BlackRock famously with their ETF. So we're definitely seeing some older generational cohorts. And then as well as gender representation as well, we're seeing more women come into this space, which is always a good thing. They're still, pretty significantly outnumbered by males. Young males tend to be the predominant crypto, sort of investor and user. But we're definitely seeing a lot more females come into the space and invest and participate and get involved in Web3 and crypto.
And just that evolution and, you sort of breaking down like who's in the space right now. Like, do you sort of draw similarities or parallels to like what's happening in crypto adoption now to like other tech or other trends that we've seen in the past? Like, is there a tipping point when you see, more of a gender representation equalize, more of an age bracket equalize, that you kind of know you're progressing at a certain rate along that adoption curve?
Yeah, there's certain cues that indicate mainstreaming of an innovation, right? So we saw the same. You'd see the same thing if you look at innovation curves of like mobile phones, of AI usage, of the internet itself. You see generally similar things. It always kind of starts with the early early adopters and innovators. These are basically people that have a high propensity to experiment with new technologies. They tend to be a lot more risk tolerant. They're happy if the user experience isn't necessarily refined. They just like to experiment and dabble with new tech. These types of cohorts, these types of people, they tend to skew younger male, and they tend to be very, very tech engaged and so on. And then as you move along the adoption curve, you start getting those older generational cohorts and and again more gender kind of balance as well. So we've seen similar thing with other technologies as well. AI, the kind of main difference between them is not so much the underlying process and how that what we call diffusion of innovation, how that evolves. It's pretty consistent across different technologies. It's more the speed at which that occurs that is the differentiator. So if you look at AI, for example, that's achieved massive adoption at a very, very rapid pace. And we've kind of moved well beyond early adopters and innovators with AI now. It's quite mainstream. Like a lot of people are using ChatGPT, for example. If you look at like the internet, that was a bit slower. We're kind of crypto as an asset class and as an innovative technology. It's pretty fairly kind of consistent with the adoption of the internet.
It probably aligns as well with some research that we did recently in our end of quarter report. Like we're seeing, and I'm more speaking to sort of the age demographic. Like, you mentioned like young males, typically Gen Z and millennials, but we're seeing on our end, like the trading volumes from Gen Xers in particular has overtaken that of millennials. Now that may be because they're, a little bit older, a little bit wealthier. But still, it shows that, these older, age, demographics are starting to adopt crypto. They're starting to want to learn about it, include it and part of their, investment futures. So it sort of aligns with what we're seeing as well. Yeah,
the real, I guess the biggest change across demographics has been the 50 plus cohort. So as you said, so Gen X and Gen Ys, especially, constitute like the majority of crypto users kind of fall within Gen Y. Really, it's mostly millennials. Because they're in that kind of sweet spot where they're financially sophisticated enough and financially mature enough where they understand investing and they understand long-term, wealth creation, but they also have typically a little bit more surplus cash flow than, Gen Zs, for example. So you'll find that they represent kind of the majority, not just of crypto owners, but also crypto trading volumes. But Gen X and boomers, so those 50 plus cohorts, historically with crypto have been very, very underrepresented. They've been very slow to adopt. There's various reasons for that. They're very, very comfortable with their traditional financial assets, traditional financial tools and platforms, etc. And they tend to rely a lot more on institutional credibility, institutional trust, that sort of thing. And so they've been a bit slower to uptake, but we're definitely seeing, pretty significant growth across those cohorts as well in the last, particularly last 18 months or so. I think BlackRock was the catalyst with the ETF, and then we've seen a lot more institutional activity in the space, and that's kind of brought a lot of legitimacy that's given them comfort to start to experiment.
Yep, absolutely. And down at ACC in Sydney in November last year, you were on a panel and you were talking about sort of adoption and sort of where we need to go in order to see that next wave of adoption. And one thing that I took away from it is, for people to use crypto, they don't need to be, intertwined with the back-end technology of it. It just needs to be something that allows them to do their day-to-day tasks at a quicker rate or a more efficient rate. So you're kind of saying, like, similar to how we don't understand how the underlying bank technology works, we need to see the same for crypto. So I guess in that sort of in line with that questioning, what are the key hurdles preventing the next wave of Australians from engaging with digital assets and also globally as well?
Right now we're doing this podcast interview over the internet, right, which uses the TCP/IP, like protocol layer or whatever to basically power the underlying internet infrastructure. I have no idea how that works, right? And I don't think most users of the internet, when you want to check your email or log onto social media, no one's really asking that question, like what is TCP/IP and how does that work? In the same way, people don't really care like what like blockchain is, unless you're actually interested in the space, you're an innovator, you're an early adopter, you're really like tech curious. The average like mainstream user doesn't really care how blockchain works, or how how the underlying infrastructure works. What they want to know is like, how do I use it, and what benefits does it provide, and how does it make things quicker, easier, cheaper, faster, or just more convenient in some way? How does it reduce friction in my life? That's what they care about. And so the question of like what's holding people back, it's a few things. Like if you ask people directly, and if we run a survey and we ask, what are the main reasons why you've not yet adopted crypto? The main reasons that you'll hear, and again, this is both within Australia, but also we see common trends, globally, pretty much regardless of the market. They vary a little bit across markets, but it's fairly consistent. You'll see, for example, perceptions of risk, the risk perception and volatility. Most people associate crypto immediately with just a very volatile, asset class. And that kind of prevents a lot of people from taking that initial plunge because they don't want to lose all their money. So to give an example, in developed markets across APAC and Australia is one of them. That was the top barrier for people who have yet to adopt crypto. About 41% of adults in developed markets in APAC cite that as their main reason, their main barrier. So just risk perception. The second is lack of trust. 36% of adults across APAC cite a lack of trust in crypto. They have, they're concerned about scams, they're concerned about fraud, etc. And then the last one is perceived complexity. Just lack of confidence. They don't really know how to get started or how to use it. They perceive it as a very risky space, and so if they make one small mistake, they're worried about getting scammed or losing their money or that sort of thing. So about 1 in 3 give that as a main barrier. You'll often see like education, right? Lack of understanding and education is one of the main barriers, but there's a lot of like nuance to that, right? So again, to my point, like the way that a lot of companies are kind of trying to adopt and accelerate crypto is by addressing education, is by educating people on what blockchain is, right? What Web3 is, how it works. I think that's approaching it the wrong way. Again, people don't really care that much. The education should really more be about articulating the value proposition. Like, how does it actually help them? How does it actually solve their problem or reduce friction? And how to get started, how to use it safely, right? I think that's really where the education piece needs to be. And I think if we can continue to do that, if we can continue to make these products and tools and platforms easier for people to use, easier for them to integrate into their existing financial habits and routines, the more it integrates with traditional financial architecture, their regular banking app, that sort of thing, and the more that we can communicate and articulate the clear benefits to them, that's really what's going to get most people across the line.
Yeah, on that point, do you feel like we do a really poor job as an industry articulating exactly that clearly, like what is the use case for crypto? I think for me, like what stands out most is over the years, I feel like my understanding of the space has come a long way, and what I thought would be a use case, you kind of realize quite quickly it's not important. Like it's not going to make a tangible difference to things commercially. What are some sort of ways that you approach when people sort of challenge the actual need for blockchain technology, or from the research that you guys have done and the trends that you're seeing, I guess, as well?
Yeah, I completely agree, Pav. I think that the more we can, it's just about reducing it down, like abstracting away the complexity. Like our industry, I think in general, to your point, like I don't think we do a very good job as an industry at communicating the value and, giving people a reason to, beyond just curiosity, giving them a reason to want to go through the
Yeah,
effort of setting up an account somewhere, downloading an app, and recording a seed phrase or whatever it is. Like the tech is really exciting, right? The underlying technology is actually really cool. In my opinion, it's like blockchain is the greatest innovation since the internet, right? In my view. So it's natural that we want to talk a lot about that, right? And we've been a very tech focused industry for a very long time. And so if you look at the way a lot of companies have marketed, particularly Web3 apps and tools and products, you'll find you go onto a website somewhere for a Web3 app and they'll say, oh, we're an interoperable layer two, something, something, right? And it's like, that doesn't make sense to the average mainstream user, right? It goes completely over their head and it doesn't
yeah,
at all speak to their main frustrations and pain points. So yes, I think as an industry, we've done a pretty poor job. I think it's improving though. It's definitely improving.
yeah,
And so how do we solve that? It's just about abstracting all that complexity away and bringing it back down to the core, the user, basically, the individual, the person, the people, right? The consumers. And again, bringing it down to everyday experience. So again, I've said it already, but like, how does it solve their problem? How does it reduce friction?
yeah.
How does it make their lives easier? Right? That's really where we need to be. And yeah, we've got a long way to go, I think, but we're definitely seeing some improvements across the industry in that way. So part of the reason why we exist is to help companies with that kind of messaging and go to market messaging and positioning and communicating that value the right way.
Oh, and I want to touch on that CoinDesk report that I referred to before. So, as I said, it's focused on the APAC region, and sort of key themes in it are focused around stablecoins and tokenization. Now, stablecoins have been around, years, but they've really sort of found that product market fit, particularly in the last sort of year or two. And there's been more focus on them than ever at the moment. And then tokenization probably gained the most traction last year, particularly around like RWAs, and how we tokenize real world assets and sort of sell them via traditional avenues. So could you give us a little bit of a breakdown into what insights the report found on those two things?
Yeah, so there's quite a lot. I think we had a dedicated chapter for each of those. So one for stablecoins and one for RWAs. And we basically explored, obviously, the key question being like how widespread is adoption and usage of stablecoins and tokenized real world assets, and then how and why are people using them. One of the main insights was firstly, stablecoin adoption is it was higher than we expected. So across APAC, of which, by the way, in this study, 5 of those countries. So we surveyed 10 countries across Asia Pacific. 5 of those countries were developed markets, so Australia, Singapore, Hong Kong, Japan, and South Korea. And then the other 5 were developing economies. A lot of variance across those 2 different groups of economies, right? So stablecoin adoption. I mean, if I ask you, Ted, like what would your intuition say in terms of stablecoin adoption? Would it be more likely in developed markets or more likely in developing markets?
Probably developing, just because I've seen case studies before where, the native fiat currency of certain countries is just the inflation's through the roof. So people want to access more stable currencies like the US dollar. But obviously with that, there's access issues. USD stablecoins in particular can be accessed via, a number of exchanges. And so it comes down to access and also the ability to move it across markets. So like, moving money from Vietnam to China is probably easier than if you were to send USD across those markets via, traditional financial routes. Exactly
right. Exactly. So we saw a lot of polarity between developing markets and developed markets. So stablecoin adoption and usage across APAC overall was 17%. So roughly 1 in 5, give or take. That was much higher than we expected. It's even higher in developing markets, and it's lower than 17% in developed markets, and it's higher than that in developing. So that was one key insight was that stablecoin adoption and usage is more widespread than we thought. There's a lot of variance across developing economies and developed economies. And then in terms of the reasons why that is, why is stablecoin adoption so much higher in developing economies? It is because largely for the reasons that you just mentioned. So currency like volatility and inflation concerns is one, particularly in countries like Venezuela, but also a lack of access to basic financial infrastructure is a much more pervasive problem in developing economies than it is in developed markets. So in Australia, for example, we have very well built and sophisticated financial infrastructure, very heavily regulated, very safe, convenient, comfortable to use, etc. That is not true in a lot of developing economies, and certainly not for everybody. So having access to an open, inclusive, financial infrastructure like stablecoins, where all you need is access to the internet, essentially, basically allows a lot of people to participate in the financial economy much more easily. The other reason is remittances and remittance usage. So in developing economies, there's a much higher usage and propensity to use remittance tools, remittance services, where they're, as you said, transferring money internationally to, friends and family back home or whatever it is. Remittance services are very expensive, for one, very slow. And there's just a lot of friction points in that process. So stablecoins almost completely, eliminate a lot of those concerns. And so we're seeing a lot of consumers in developing markets using stablecoins for that reason, is for international remittances. So yeah, those are several key insights that I guess that emerged.
Yeah, and for anyone who's interested, we will link the report in the show notes. So I think you can just sign up to get the report sent to your inbox. So yeah, make sure to check it out. And then another key insight from the report was just the topic of regulation. Now, regulation can get boring and long-winded because, we've talked about it for several years now, and we haven't seen too many developments in Australia, at least from a retail point of view. There have been developments, and, SwiftX has contributed to how these regulations will look. But in terms of, strong, solid regulations that people, every day can understand, we haven't seen too much. So I want to sort of understand from your point of view how, everyday Aussies and also people as part of this report are viewing the impact of crypto regulation and how it will impact the market. Do people want it, or do people see it as sort of a negative thing?
It's a good question. As soon as we start talking about regulation, a lot of people would drop off, right? Because it's not a sexy topic. It's not exciting like talking about meme coins or something. But there's a really interesting thing happening with regulation, which is, so firstly, around the world, there's a lot of proactive movements towards properly regulating crypto. Obviously, you had, MiCA, you had recently the regulation that passed in the US, and globally, we're seeing a lot of this as well. What's really interesting is, consumers want this. They're asking for it. They're quite broadly supportive of crypto regulation, as they should be, right? Because it's necessary to protect consumers. And we've all kind of seen the headlines in previous years, of FTX and Celsius and BlockFi and a lot of these famous collapses that have really hurt and burned a lot of people. That doesn't help anybody, right? And so there's broad support for regulation. But what's really interesting is when you look at support for regulation, crypto regulation amongst crypto users versus non-users, so those that have adopted crypto versus those that don't, you would almost expect support. I guess famously, crypto users have kind of been a bit anti-institution, anti-authority, because that's kind of the core premise of crypto is decentralization and whatnot. But what's really interesting is crypto users are actually more supportive of regulation than non-users are, right? Which is kind of counterintuitive. And when we first saw this in the research, it was quite surprising to us, but it also does make sense. Because crypto users, they've been through it. They've seen, a lot of them have experienced. A lot of them were, victims of FTX, or they were, felt the effects of that in some way, right? So they've seen the worst of it. They've seen what crypto can be at its worst when it's left to be completely unregulated and improperly supervised. So I think in the report that we did with CoinDesk, we found that 77%, 77, that's a high number, right? That's almost that's 8 in 10. Roughly, crypto users are strongly supportive of crypto regulation and responsible crypto regulation. That compares to 62% for non-users. So 77% versus 62%. That's a big gap. So what it just shows is that crypto users, they're more broadly supportive of crypto regulation, but importantly, and this is both what they're demanding, what they're asking for, but it's also just frankly how it should be done. Is it's about responsible regulation, right? It's about regulating in such a way that protects consumers and allows this industry to flourish, but it doesn't stifle innovation, right? That's really, really important. And fortunately, a lot of governments globally have been acknowledging that, and they've been putting forward legislation that has enabled that, to protect consumers while still enabling innovation and allowing the industry to flourish freely as it should.
When we step back and just look at what you sort of articulated there with the regulation lens of things, again, there's going to be different localities, but I think we just approach it even from like a global perspective. We think about digital assets being that sort of global juncture for the world in terms of new ways of doing commerce and trade. How do you sort of see the current trajectory, even from the research that you guys have done, of what it looks like now and what it could look in the future? Do you kind of think it's, we're on the path now that's going to lead to more of the same, or do you feel like the future for how traditional finance and crypto and digital assets merge may look a lot different than what we expect?
It's difficult to know exactly what it's going to look like for sure. But I think if you just kind of follow the natural progression of the evolution of the history and especially what we've seen in the last 2 years with the integration of TradFi and crypto, and a lot of mainstream TradFi brands coming into the space, like PayPal have already been in crypto for some time. Stripe recently came back into crypto. Revolut, a lot of these global kind of banking apps now have embedded crypto and digital assets into their platforms. I think we're going to continue to see more of that. We're going to continue to see more of this integration between TradFi and crypto. I'm very interested to see what the big four banks here in Australia do. Like historically, they've been quite averse towards the industry, almost hostile, if I'm allowed to say. But there's people are asking for this. Like Aussie consumers are asking for this, and there's 4.5 million Australians right now that already hold crypto. And then there's roughly 10 million Australians that don't yet own crypto, but they're open to it or they're actively considering it right now. So that is a massive market, right? You're talking about essentially 2/3 of adults within Australia. I don't know how you can turn a blind eye to that. That is a significant opportunity. We have started to see within Australia, at least, some TradFi institutions coming into the space. AMP, I think it was in late 2024, introduced Bitcoin into one of their retirement portfolios. Why? Because people are asking for this, right? So we talked about the 50 plus earlier at the start of this call. The 50 plus demographic, they control a lot of the nation's wealth, certainly through superannuation, at least, in terms of like the proportion of retirement balances that they have and they hold. And they're curious. They're actually really curious. They want to participate and get involved and have access to this new emerging asset class. The reason adoption is so low is not because of a lack of interest. It's because they don't really know how, or they're concerned about, again, scams and trust and volatility, etc. But if a company like AMP can come along and have a regulated, portfolio managed, exposure to something like Bitcoin, that people are lining up for it. So I think we're going to see more of that, more integration by banking and payments and TradFi with digital assets. And I think overall, I think it's a really positive thing. And I think the user experience will only continue to get easier. So again, consumers are asking for integration between these two different, financial rails or financial infrastructures. And I think that as we start to see more of this integration, they will merge both from in terms of like the companies getting involved, but also the user experience itself. So I wouldn't be surprised if in 10 years' time you can open up your banking app and you can you pay your grocery bill, pay your electricity bill, your utility bill with stable coins, for example. I don't think it'll probably be called stablecoins at that point. It'll just be money, right? But in the back end, it's like stablecoins powering it. Again, abstracting away all the complexity. So I think we'll see more of that, over the coming years. I certainly hope that's the direction that we go, but I guess it remains to be seen.
And just sort of to chuck in one more question at the end here, is there any other emerging technologies coming out of Web3 or digital assets that you're keeping your eye on, whether it be like, it could be something that's existed for a while, like DeFi, or like, the emergence of AI and blockchain? Is there anything that you're seeing from your research that's gaining traction?
A really good question, Ted. Anything that's gaining traction. I mean, a lot of our attention has been pretty squarely focused in the last 12 months on stablecoins and RWAs, as we've spoken about. I think there's a lot of potential still to explore, and a lot of room to grow still within that sub vertical. Probably one that I've seen, I think is potentially going to be the next major theme over next few years is, I think stablecoins and all these will continue to flourish, and we're going to see more of that in the coming years. But I think that tokenized equities, especially, we've seen quite a bit happening there. So Kraken recently introduced I think it was called X stocks or something. Where you can buy like tokenized equities. I think Robinhood also have introduced or launched a similar product, and a lot of the major exchanges are looking at that. BitGet have launched stock futures. We can now trade those on the BitGet exchange. And I think we're going to see a lot of TradFi institutions, not just crypto exchanges, but a lot of TradFi companies as well, facilitating access to equities through tokenized, in a tokenized blockchain powered way. That confers a lot of benefits to investors, particularly investors in, say, again, developing markets or other economies globally, where they want to access US equities or stocks in general, but they can't access that through traditional, financial providers, right? And tokenized assets provide, 24/7 settlement, significant liquidity advantages. You no longer need $1,000 to buy a single share of a Google stock. You can now buy a fraction of it, right? Fractionalization. So there's a lot of access benefits that are provided by tokenized assets. So I think the opportunity is there. The market opportunity is obvious. The demand is there. It's just who gets there first, and what does that look like exactly? But I think that's going to be a key trend in the coming years. And then beyond that, Ted, outside of that, in terms of other subverticals, there's nothing really that's like really stands out as we've seen a lot of momentum in, other than obviously stablecoins as we talked about. But I'm still very excited at the prospect of some of these categories or technologies that have been around for some time, but they haven't yet achieved their full potential. Web3 gaming is one of them. It's been around for a long time. It's struggled to really hit mainstream. And I think a lot of that is there's a variety of reasons for that, but I think execution has been really poor. I think a lot of the way, like, play to earn, I don't think that's the way to go, right? But I think there's significant potential still in Web3 gaming. I think there's significant potential in NFTs, not as collectible Bored Ape Yacht Club, JPEGs, but in terms of a digital collectible item that can confer various utility-based benefits, right? It actually allows you to do stuff with it. I think there's a lot in there. And then the last one is decentralized social media. I think there's a lot of potential still there. Again, that's one that I think we've seen a little bit more there in terms of, like, people like Blue Sky has done reasonably well, I think. Probably one of the leaders in that space, as I guess as a decentralized alternative to Twitter. But still, nowhere near the explosive growth that we saw with social media when it was first introduced back in 2007 or so. So that's yet to fully mature, but I still see a lot of potential there, and I'm very excited by the possibilities there as well.
Yeah, that's super interesting regarding the decentralized social media, particularly like with the under 16s ban coming in Australia. Like, are people going to look for ways to get around that? Like, people naturally find ways to get around that, but like going down the Web3 route and finding alternatives there might be the go. But listen, thank you so much again, Jonathan, for coming on and sharing those insights with us. They're super valuable. I think we'll try and get you on again because there's just so much to dive into, and each year it's evolving. So I'm sure you'll have some new updates for us soon. So once again, appreciate it. As I said, we'll chuck all the relevant links in the show notes for that report. But then, have you got anything exciting coming up this year?
It's going to be a big year for us, Ted. For those that have followed our journey, we started, Protocol Theory was established 2 years ago. We've grown pretty quickly in that time. We love what we do. We believe in what we do. So we've got a very big year ahead. We've got a few reports coming out with some other major partners. So, CoinDesk we've spoken about on this call. But we have a couple of new and big reports coming out with MoonPay and with Tangem and with Chili's. So we're really excited about that. That'll be in this quarter. And then internally, there's a lot of other things we have planned in terms of this new products and services that we're kind of like starting to introduce. And probably can't go into too much detail into those, but we've got a big year ahead and a few really interesting reports that I think your audience might find really valuable and insightful. Yeah, awesome. Chili's is like the fan token collectible? Correct. Yeah, I'm keen to see that one. That'd be cool. Yeah. Well, awesome. Thanks again, Jonathan, and we'll talk to you next time. Excellent. Thanks for having me, guys. Thanks very much.